All right. Good evening, everyone. Thank you for joining us on Casual Friday. Hope you're all well. As the title betrays, we've got, by popular request, as well as my own just personal bias, given it's a long-time friend, and your feedback from last time, Legistatus to talk about, well, just about everything. He's been very bullish for a very long time. Things have gone up a lot. So what better to do than let him tell you all he was right, and then he called it for about an hour and a half on a Friday. How are you doing, mate? Thank you for joining us.
I'm doing great. What an intro. It's great to see you, Craig. Appreciate you
Likewise,
having
mate.
me.
Of course. We always love the production quality, information, and all other things. And that is made possible, of course, by our sponsor, Bybit. Even though we are not a German football team, they nonetheless support our work. So their links are available in the description below. Make sure to check them out. I think the current thing they've going on is a some sort of rewards hub promotion for those of you who don't have an account yet. Perhaps it may be worth your time. Either way, support the live stream and this project by clicking the links in the description and by liking the video and subscribing if you haven't already. We're going to try to keep the tone very casual, as I always fail to do on these Friday sessions, and talk about a whole bunch of things. Now, of course, the elephant in the room, I don't know where you want to start. There's Bitcoin, there's ETH, BTC, DeFi, altcoins, but there is, of course, what seems to be the rounding off period of a presidential election, barring some unbelievable, I think, legal so-called arguments. So do you have any immediate either responses, reactions, or just thoughts on all of that?
People could probably check Twitter for my personal opinions, but from a market's perspective, it seems like the market has decided Joe Biden won the presidency, and the uncertainty around what the end result will be doesn't seem extreme right now. Although there's a very whiny old man who's going to fight, but the math is very much against him. The opportunities for challenge are very much against him. If anybody was paying attention or is old enough to remember the 2000 election with Bush and Gore, the Florida electoral votes alone were plenty to swing the election one direction or the other. And that was one of the closest states. So that's where they focused their recount efforts and litigated every ballot, and hanging chads and butterfly ballots. All that stuff was the case back then. That's different than this scenario. That was much more uncertain in terms of what would be decided and how it went to the Supreme Court, because no singular state is the reckoning here. He has to flip several combinations of these four states that are outstanding currently. And Pennsylvania might not even end up being all that close. So the market's moved on, even if he hasn't, is kind of the way I would look at it. And the Senate seems like it's leaning towards staying Republican, which would essentially mean that we continue to have a fractured government and probably no major, like third rail type of stuff would have the power to be voted on. So it's mostly the normal meat and potatoes, like printing dollars and doing stimulus stuff is about all they'll agree on. And then maybe the presidency will become a little more normal. People don't check their, Twitter streams to see what the president tweeted while he was taking a poop that morning. But that's kind of my.
No, of course. There are a lot of arguments floating around, maybe not consensus, but to the effect of, election uncertainty, or this person wins, this happens to the market, that person wins, this happens to the market. None of that really materialized. I think, if anything, the bookies were much more volatile than the markets themselves, as we saw with like the Trump and Biden token. But I tend to agree that in terms of the big blocks, which is kind of stimulus and spending, hopefully we get a bit more fiscal action. That's my kind of Minsky side, maybe leaking out, which is normally very well hidden. But yeah, it doesn't seem like any of those, at least when it comes to equities or Bitcoin or whatever, the market has just kind of shrugged it off and traded higher. Do you think that's just the picture we're dealing with now, or could reluctance on behalf of the president maybe shake things up still?
Yeah, I think a lot of money had moved to the sidelines over the course of multiple years, actually, and just kind of stayed on the sidelines throughout this run-up, or maybe even sold more. The institutional money on the sidelines, and forgive me, I don't have the graph, but like it's really, really large amounts of institutional money that was just chilling. So if you're looking for what is a singular event that's going to drive money back in, it's any degree of certainty of what, after a major market event like that. And therefore, I think people are going to be hungry to get back in the market. We saw it get front ran basically as the market started to go up like the day before pretty strongly. And, you have multiple 2 to 3% moves in a day. Even with the shenanigans today, the market's pretty flat. It's going to end up being a pretty much non-event in my mind. And what ends up having a broader impact on the market is whether there's more secular decline ahead due to, the follow-on effects of the coronavirus shutdowns and second wave or third wave or whatever, whatever you want to call it. Europe's in the throes of it, I know, and the U.S. is once again lagging by just a little bit. Maybe that'll cause some downside, but there's a ton of money on the sidelines, and the Dixie looks like absolute garbage, which pushes people to other assets. And no institutional money manager is going to ignore that.
Very well said. And how does Bitcoin, of course, the natural question to ask, how does this affect my bags? Right. But Bitcoin's just ever since all these significant high time frame breakouts, that there's really been only one game in town, which has been the long side. The pressure has just been absolutely relentless. I was looking through or cycling through all my main time frames and trying to find an instance where buying any red candle wasn't virtually immediately profitable. Really struggled to do so. Market structure has been fantastic. Anything that looks like resistance has just been eaten up. And even, at the time of recording this, we're just kind of consolidating in an area where, you'd be hard pressed to make an argument for being super bearish, in my opinion.
Yeah, I totally agree with you. And, you talked about taking some off spot and, taking a profit here and there, which is totally reasonable as we're pushing up into really the only remaining cluster, but it's very wide between, say, 15 and 17K in the underside of the movement 3 years ago. So where is it going to cool down a little bit? It could be anywhere, It could be now. It could be, your sell could look great on a $2,000 or $3,000 pullback, which is just going to allow the chart to fill out this extraordinarily large, vertical profile on the chart that doesn't have a lot of historical action in it. And we don't know where it's going to do that first, but all the macro stuff fits into where it's kind of blue skies for Bitcoin. But it's not like there's nothing to push through. Like, people pay attention to previous all-time highs. They pay attention to, the number of days above this price ever 3 years ago. So there's a lot of anticipation for a breakout and price discovery, but you got to get the breakout. You got to get to price discovery for that to matter. And there's nothing to stop us from consolidating for multiple weeks before we make pushes higher, or having drawdowns as much as maybe even like 25 or 30% in a more extreme scenario and maintain extremely bullish market setups. So taking profit on the way up, no big deal. Am I looking for like large swing trade shorts? No.
Yeah, this is something we discussed on the show, I think even last time you were on, with regard to reliable trend characteristics of this instrument when it trends bullishly on high time frames. And there seems to still be a consensus view that, on the way, don't sell the dip, because on the way up, even 2017, of course, being the typical example, this is an instrument that regularly corrects, 30, 40%, depending on how it's measured, etc. And of course, having that in the back of your mind, while helpful, I'm sure a lot of participants ended up maybe selling the dip or expecting much deeper pullbacks in a market so far, or in a trend which hasn't offered them. And the distinction being made by a lot of my learned friends and colleagues is the kind of spot-driven nature of this rally versus derivatives just going wild. Do you give any credence to the argument that maybe the era of such deep pullbacks is just much less likely, either in intensity or frequency, given the changes in maybe microstructure or how we got here?
I don't know. That's a great question, because were derivatives big enough in 2017, you think, to drive that degree of pullback? I feel like they were sustained. So. I don't either. I think they were sustained multi-day, 2 week, maybe 1 2 week moves, but they were big events like China bans Bitcoin or the Bcash fork uncertainty, those marked bottoms of those prior events, like Bitcoin goes up to 3,000 and goes all the way down to 1,800. Well, when I was in that scenario, I was looking to get myself into Bitcoin more and more. So I was trying to buy those dips as fast as I could. And I was one of millions of retail participants seeking entry into the market during those dips. As long as you have people that are willing to buy the dips, then maybe they can get bought up, but it doesn't mean they can't be severe while you're on this ginormous trajectory, for lack of a better word than ginormous. But like once we broke all-time highs above $1,200, people thought like, okay, the moon is like $4,000, So is it okay to have a 30% drawdown after a 4X or a 5X? Yeah. I think it's perfectly reasonable. And I know, price discovery is difficult to trade, and, you start looking for targets, and you and I talked about that last time I was on. Yeah. What do you look for? Do you look for fib extensions? Do you look for drawdowns back to a moving average or what? And in the last market cycle, and history doesn't repeat necessarily perfectly, but in the last market cycle and in other trending markets, there are some moving average type strategies, like a 20-week moving average is a high time frame, fast moving average that a bull market respected. And that divergence between price and, say, the 20-week moving average would get as much as 20, 25, 30% as the market got hot. So it gave plenty of room for drawdown. And to give some degree of confidence, there's always a little bit of fear buying a dip, but some degree of confidence that you can buy this dip and have a relatively straightforward calculation in the risk reward profile for if it maintains the trend or not.
I think that's very well said. And it actually brings into relevance, I think, a question actually asked by Dan, who was kind enough to preface his comment with serious question in parentheses, for which I'm grateful, of course. And he's saying, how do you deal with having missed this whole rally? I expected it, but missed it due to stupid reasons and now lost quite a bit revenge trading. I don't think this is actually the most uncommon thing for crypto markets generally. I've always not criticized, but kind of warned against people who try to flip, especially people who aren't traders, who try to flip their entire portfolio or exposure, kind of like a light switch. I'm either all in, all out, I'm fully in fiat, fully in crypto, etc. And I'm sure just looking at the nature of this rally and the absence of those high time frame pullbacks that we talked about, there will have been those who, despite being in the crypto ecosystem, may have missed out on. I'm assuming in this instance, it's, let's say, the Bitcoin rally, which has been the most prominent one in the past few weeks. You and I have seen a few trends in both directions now. Do you have any maybe general or even very specific advice about those who feel like they've missed this whole rally?
I, as a participant in crypto trading and ecosystems, I have a general bullish bias because there's a fundamental classification for me to participate in this market. I'm not just participating in, Bitcoin and crypto markets because of the way the price action works. And, I don't care if I'm trading, Beanie Babies, if it has this chart I'm in. I'm here because there's a certain underlying fundamental thesis that I believe in for Bitcoin that leaves me desiring to have some Bitcoin spot exposure. Now, maintaining your Bitcoin spot exposure can be hard in a huge markup cycle and price discovery and reaching all-time highs, and you're 5 or 10x in the money or something absurd like that. Most people today aren't that. Like, a lot of people are in profit now at these prices. We haven't spent much time above them if they were just, buy and hold type of investors. Mm-hmm. But even if you DCA'd in over the course of a year or 2 years, like, you're not at the level of profit that you're like, oh my God, like I cannot afford this to draw down because this is life-changing money or something. So I am willing to hold on spot until I reach some broader targets. And I believe strongly that Bitcoin will have a new all-time high in a long-term trend scenario. So am I particularly interested in selling spot below $20,000 Bitcoin or whatever markup we get from that? No. Will that be a lot harder conversation if Bitcoin is, say, $28,000 or $33,000 or $40,000? Yes, because that is very serious money, and we're in price discovery. We're trying to find out what's next. We don't know what is a Bitcoin worth? Like, it's not the same as the calculus you do when you're defining the fundamental metrics of a security like Apple. It's different. There's more fuzzy stuff in how it's valued. So speculators are constantly trying to value that, and when it's not in an all-time high, or when it is in an all-time high. When it's not an all-time high, maybe I'm looking to hedge against a down move because I feel like we've run too hot and, like we have some downside potential. That's not going to leave me out of my BTC collateral. Mm-hmm. Some of the best scalpers and stuff that I see, like, Salsa has been on the show, and it's just a fantastic trader because he's so public with everything he does and shares not only his setups, but his emotions and everything he's doing. And at the end of the day, even if he misses the trade, he's usually going to be satisfied with the fact that he has some spot exposure.
Yeah.
And you can miss a trade. I think what I've made the mistake of before is over trading my long-term views. And therefore I'm like all in US dollars, have no Bitcoin, something like that. That's not a place I really want to be. So I always want to have some Bitcoin. Do I have a strategy to where I put maybe 25%? Okay, let's say 15K, 16K. Is it okay to take 25 or 30% of that portfolio out, put it aside, and then when we do get that tap on one of those trend metrics that I might follow, like a 20-week moving average, that tap, that 20-25% dip, it might come and it might be a dip to 18K, which is higher than now, and I might redeploy that money. That's fine. But I have a plan to put money aside on the way up and then deploy that money on mean reversion in a bullish trend, and I'm okay with that. Mm-hmm. Am I perfectly efficient? No, but I'm at the same time kind of managing my funds. I'm not just a participant on the tides of the market. I'm not just riding along on the party. I'm managing my upside and my downside while I'm doing that. And you can put together various strategies there. And I have not had like I've not had like a ton of USD on the sidelines in a while.
Sure.
But that's due to my bias, not due to my trade plan. And it's somewhat due to my trade plan because I have this bullish thesis that we're going to break the all-time high. So I'm trying not to get stuck in the weeds on $1,000 drawback for a product that's priced $12,000, $13,000, $15,000.
Yeah, I think that's very well said. I agree. I think my personal answer to that is it takes, I think, if you're a participant in the crypto ecosystem, it takes a reasonably unique set of circumstances to miss spot going up this much and in such a hard to argue against trend, right? Or unambiguous is the word I'm looking for because English is difficult. Trend. So when you see on Twitter, for example, someone being fully tethered or being fully hedged, etc., I think, fully tethered, I mean, that sort of speaks for itself. They've moved their crypto or Bitcoin usually allocation to a stable coin, in this case USDT. When people say fully hedged, that's usually, in my understanding, a one-time short on like an inverse futures contract where you kind of lock in a USD value per Bitcoin. But I think as an observer...
A 1x type of situation.
Yeah, absolutely. But I think as an observer, it's important to understand that when you see that, more often than not, these are traders whose views can change very quickly doing that. And if they start to get even early or tentative signs that their hedge or whatever it is, their fiat allocation is incorrect, they will get out of that. No matter if they've locked in at like a lower price or the fees or whatever else, that tends to be a very kind of flexible position, almost like a trade in itself. Like you'll see really good guys. I mean, Gainesy's done this, Salsa as well, same names coming up. They will quite often hedge publicly and say I'm tethered or I'm hedged my account, whatever it may be, and then it could be on the same day that they completely untether or unhedge and get back into the market. So I think you almost need a trader's mindset with these things if you're going to be out of the market, especially when there are reasons to believe that we're in a trend. If you don't have a way of getting back in, that's I think how you get stuck in fiat when perhaps you may not want to be and end up missing these sort of moves. And again, generally the market is under no obligation to pull back. That's generally not how you should, in my view trends. I think I posted about this somewhere yesterday, where what you get a lot in crypto is when it's trending up, you kind of hope that every pullback every short-term pullback is the one, as opposed to just buying it and hoping it's not the one, because the trend following trades are actually generally easier to take, right? Like you see like one red candle, it's like, okay, this is it, this is the 30-40% pullback, whereas in my view it should almost be the other way around. When you see those lower time frame pullbacks, until proven otherwise, those should be the dips that you're buying on lower time frames until such a time that you do get your high time frame signal. And again, yes, you will end up following that logic in a set of circumstances where you bought the shallow pullback as part of a higher time frame pullback. But the whole point of trading a trend is by that point you've taken 3, 4, 5 multiples of other trades which have far made up for that one loss, which is trend reversing. And that's my opinion, at least.
Oh man, I'm totally with you. I'm pulling up the BLX purely because I want to highlight one extra thing on that, which is if you're trying to tether up to avoid a significant drawback or something, one of the big things that they're trying to avoid are black swans, right? So like, you have what we had in March and stuff. If you are always wanting to be exposed to the upside, you're almost guaranteed to be exposed during those periods of downside too, to spot. Mm-hmm. Now you may get in with a swing trade on a derivatives platform like your lovely sponsor Bybit and manage to maintain your dollar value. But oftentimes if you're wanting to be in on the melt up, like the third or the fourth or the fifth week in a parabolic move up, you're probably also going to be exposed to the downside when those types of events occur. And the difference is, how do you see the broad market relative to that? Mm-hmm. Is this a fundamentally broken market that you should have exited? Or is this a dip that you would have loved to buy, but now you can't because you're still in on spot. You weren't tethered, you weren't hedged. And when someone has the capacity to move their entire portfolio in and out of a position or tether it or hedge it or whatever, they are in a different mindset, and they have the capacity to trade with enough liquidity wherever they're trading to be able to make those moves and get in higher. Mm-hmm. So if you use this same example, like now, let's say you did this a few weeks ago and you're like, hey, I think that we're going to fake out again up here like we did, and they got out. Well, they might have been out the whole time we dinked around, these several weeks where we dinked around the moving average, where they don't know, is this going to nuke down and go to the, this whatever the earlier accumulation levels back to 6 to 8K? They could. The ones that are going to succeed, though, are going to be willing to buy back when it goes back above 12K. Yep. And they would have been in for 12 plus or whatever, their comfort zone is, maybe between 12 and 14, like to, that prior week. Whatever your analysis is, however you're doing that, they're willing to get in higher if they're willing to tether up to avoid downside and things like that. And if you can't feel comfortable buying something higher than you sold it, mm-hmm. then at some point you're going to find yourself on the sidelines. There's just, I don't see how you avoid that. Do you?
Very well said. I agree entirely. I think especially for a lot of those traders conditioned in sort of, 2018, 2019, who are just used to a lot of chop and ranging, it's almost a curse word to say that you're a breakout trader, or that term is kind of frowned upon as, liquidity, sheep, buying the top, etc. But yeah, if you're in the trend forming or in the trend continuation legs of some sort of high time frame move, breakout trading works amazingly well, right? Because every single breakout holds. There's no fake out. There's no kind of crazy wick, SFP, whatever all those difficult technical terms mean. You just buy high and it goes higher, as crazy as that may seem. So I agree entirely. If your system at the very least doesn't cater for and this is something I've spoken about on the show before, like if it just has nothing when it comes to momentum continuation entries, I think you just end up leaving a lot on the table. And by the time you get your high time frame 20, 30, 40% pullback, and that's kind of the first trade that you can actually take, a lot of your peers with those momentum continuation pullbacks have made like 10, 20 trades and done very well, while you're waiting for one, and at that point it's kind of a coin toss, right?
Absolutely. And I think sometimes you can... I know, Craig, you talk all the time about trading your system, and I agree with it. At some periods, especially, for instance, if you're more of like a pattern or momentum trader, mm-hmm. you can also recognize something happened that is like a prime setup for a different system, and it just kind of aids your decision making. For sure. So I pulled one up. Here's an example where like this just was consolidation, and then it retackled like with a kind of an impulse candle I might be getting triggered to get into this position here, whereas maybe someone else isn't triggered to get in until it makes a new high or it clears a particular level, something like that. And all of us are in for markup but for different parts of it. Well, get up here and, something like this consolidates and it does, some kind of consolidation. Well, this could be your breakout, except for it immediately retraced back into the pattern. And there's your other system, like immediately telling you that this pattern failed and maybe you should be careful. So like these types of events, somebody gets chopped up to hell and back between this and then this one too.
Yeah.
Like they can get chopped real hard in moments like that. But if you recognize like this is different than the way I would potentially look at this market, like to me, I see, oh, I'm supposed to buy here. And it didn't work that way. But then you get up here and it's like, what pattern is this? And then we giga chatted out of it, like these things aren't easy, but sometimes you can borrow from a system while also following your same plan.
Oh, I agree.
This one was at extreme risk of doing some kind of goofy stuff, just like we did back here. Yeah. It just didn't. So, the trader has to determine like when do they decide they're wrong. So this trapped a lot of shorts, probably seeking something that did this. And then all of a sudden you're at 15.5, 16K and holy crap, now we got to do it again. We got to consolidate again. We got to find where's our level again. And that's not easy, but those people like you talked about with Salsa or Gainsey or whatever, they're willing to trade 10, 15, 20 times inside those zones because most of the time they might get a paper cut or whatever, but every now and then they're going to get one where they just print because, they knew this was crap and then they were like in for this whole move with high leverage and they increased their account by 20 or 30% or something. Sure. And that makes up for those paper cuts.
Yeah, I totally agree. You just have to do business where it matters. And I think that there's still a lot of bear market or non-trending conditions, PTSD, whereby you just start throwing around terms like overextended, even though your system might not cater for like what an extension is. And you basically find ways to cope, right? The numbers just moved up too quickly. It's just wiped a lot of levels and your comfort area is in a different point at a different point in the chart, but the market doesn't care necessarily where your comfort area is, right? It's those people who adapted within that consolidation or the one preceding that, etc., and were able to identify the shifting conditions. They're the ones that benefited. So I agree. Whether you want to call it momentum continuation or buying, paying up, I think is what Duck calls it as well, for like a better entry. I think especially when we enter an area where high time frame resistance is, tentative at best, right? I think you made the case very well with regard to what structure is there actually up here, especially when you reach these kinds of levels of uncertainty and ambiguity. I totally agree that your discretion just plays a bigger part, and especially the emphasis on lower timeframes goes up, in my opinion. Do you want to quickly bring us or make the case for that kind of cluster or some of the levels you were referring to earlier in the call?
Yeah, I pulled up the Binance chart because that's where I've got more of these sideways. I'm just like picking out where's a weekly close or a daily close or something I can pay attention to. The one that I was most interested in was the underside back here. Yeah. I think you had been focusing on that as well.
Certainly.
There was also the wick here. There's your like Mr. Liquidity, whatever, like the top. The problem back here is the people that bought and closed their short, they were very impressive as well, because you could look at that and be like, well, we're going to 7K. And guess what? We went like a third of that distance. Anyway, so over here, what's amazing is the pure distance between, this level and like the next weekly close. That's a 20% move on spot. That's obscene. And from there to the all-time high weekly close, a 17% move on spot. So those are just enormous ranges. So can you look, hey, what are some of the practical areas in the middle there on the daily chart? If you look, do like a back in time type of view.
If you can zoom far enough, yeah.
Yeah. Who physically is going to make that effort to like go track exactly what daily close mattered?
Yeah.
other than maybe the all-time high one. So in my mind is look at the stuff you can fit in your freaking chart. And for me, that's probably the weekly and the monthly.
Yeah.
I think you did. This is a video you did recently, and it opened me up to like this, holy crap, this 13.7, 13.8, bigger level, but look, it aligns right with these other ones we talked about.
Mm-hmm.
It's in the same zone between that weekly underside, the wick here. And this is partly what gave me confidence, like above 13.8, above 14K, like good Lord, like there's not much.
Yes.
And I'm not I'm like the Wolf of Wall Street guy. Like
selling.
I'm not selling. I'm not leaving. Like you are not shaking me out of this market and into freaking dollars because the candle was too green. Like no way, man. I am in. Like that's why we're here.
Yeah, very well said. Very well said. And another thing about high time frame closes, because the Duck and I both discussed, like in Technical Roundup, for example, the monthly close on ETH and BTC was at structure, so like at resistance. But then we also discussed that when you get those kinds of high time frame candle closes, where there's like a whole month of trading until you get your next data point, that's not the most practical thing in the world, right? So the remedy for that is you then go on to some lower time frame and see if you can build a confluent case or get some sort of alignment between the high time frame close and the direction that it seems to suggest, and then the actual lower time frames following through. And something we noted really early on is that despite monthly closes at structure, if you look at just a weekly time frame, daily time frame, intraday market structure, there have been virtually zero signs of weakness just on the way up. It's not like monthly closes bearish and then, weekly starts looking bad, and then so you sell a bounce on the daily, you kind of build that sort of picture. It's been just really one-sided the whole way, and we can see that just looking at that chart right now.
Yeah, I don't have to look at what these were to just realize, like, just consistent support at whatever level that is, and bam, when it nuked, it just got bought up immediately from that level, and like it fought on this, treated it as a ceiling over here. And when it broke through, it went ham, and then it just chewed up and over and over and over again. Now, if I'm looking at these low time frames, do I think this could be a scam and go to 16.1 and nuke? Absolutely. That totally fits in line with the same thing. And like I said, I don't even know what the 16.1, that was that weekly close. So like that's that underside weekly close that we talked about from back in 2017. Mm-hmm. So do we go to 16K and then see our, make a new high and then, jet down? Sure. Maybe that's when this thing gives up. I don't know. I want to be a buyer of some of these dips rather than ending up on the sidelines while it jets up ahead of me.
Sure.
And you can look at the low time frames and keep these relevant. You mentioned that earlier. I was just going to, not because I want to talk so much about what the levels are, but the legacy market can sometimes give us a lot of hints in terms of what type of things are important. I've had these same levels, forever, because it's the 2019 open, the 2018 open, the 2020 open. Look at what we did with this 2020 open, like resistance, breakout, support. Like, we use these time-based levels, and then, some other large moving averages or significant events. Like, those are things that matter in real markets. And our market's not very real yet, but we have things like the halving and, quarterly open interest closes and some other things that you can just throw on a chart, see what the price was there, and then see how the price interacts with it over time. Mm-hmm. Similarly, that's how, like, if anybody uses pivots, like sometimes pivots that just show, like, here was the prior close, or, there's various systems that you can use that'll just kind of slap some automated levels on your chart for you that are often more time-based, but you can then see how the chart interacts with them over time.
Yeah, I think those have been I think they're a lot more popular in Legacy. As far as I'm aware, but it also goes to show, especially on high time frames, like more often than not, no matter what kind of technical system you use, will land at kind of the same areas, right? Even those indicators, which derive their levels from stuff that I might not look at, like if we're looking at a high enough time frame, we'll get the same areas and the same levels because it's just tends to be derivatives of price over time, right? But not to put you in the hot seat, but I think a lot of participants are still looking out for that big single high time frame pullback, the one that becomes scary for intraday, because intraday traders have been having a great time, right? The trend has been unambiguously up. There have been virtually, I think, literally zero fake outs in terms of market structure, just like straight high highs, high lows, everything going up, just a couple of maybe rogue wicks to deal with. If/when that high time frame pullback, the one that'll be visible on the weekly, etc., comes through, I think it's always helpful to have a plan to execute, to have a plan in advance so that you can actually execute it with conviction should it come to fruition. For you personally, and let's say you did, for example, sell some spot, or there's some allocation you really want to give to this instrument, but you do want to see that higher time frame, kind of maybe weekly red candle, etc. What is that area for you where you're like, okay, this is where I can really bet on the high time frame trend versus just more maybe a technical pullback or whatever else it may be?
Yeah, I really like the 20-week as like I said before, a fast moving average that has a history of working in the market. This is the entirety of Bitcoin's history on a weekly chart. And we've seen bull market dips respond to these levels. This is the 200 week, which literally, that was the floor for the first bear market where the 200 week was available. And then what we had here, and even in the liquidity crisis in March, essentially provided the support that we eventually got. Most impressively, though, was the entire parabolic run of 2017. Like, you basically couldn't get below the 20 week. I mean, you see these touches, and those happened in minutes. So like being so clean, or like wicking whatever that percent is below that. If I believe in the bull trend, my risk reward fits to be able to buy within some kind of range of that level. And even when it's been a little choppier in a 3-year reaccumulation or what, bear market, whatever you want to call what we've had, see, I've got some dumb boxes here too. I'm going to be looking at the same things. Like what's our 20-week tap? It's 11.2. Well, that doesn't exactly align with the best weekly close we had, which was more like 11.9. So I'm going to pay attention to both of those. I'm going to pay attention. What's our most recent weekly high close that, just turn resistance into support on that. So I want to see how are we reacting 11.9, 12K. And then how is our moving average situation lining up with that as well? The 20 week and the 200 week, I'm going to pay the most attention to. When they collide, it can really be pretty nice sometimes. This is Ethereum versus the dollar. I know it's not Bitcoin, but keep that 12K in mind for Bitcoin. Ethereum versus the dollar just got the 200-day moving average, or 200-week moving average, and then this is the 20-week moving average. What I find interesting about that is like that weekly close back there at like 310, we wicked down to. But if we had some kind of sustained drawdown at some point, like really heavy drawdown in Ethereum, I could imagine that being the type of level where something like a 200-week moving average aligns with some prior weekly close that I really like. Or maybe we mark up for a couple of weeks, right? We go to, let's say, $650, $700, and then we look to go down. Well, I bet this 20-week moving average, it's going to be tracking too, and maybe that aligns to where, bam, nice. 450. Yeah, 450 is your new like hammer the buy type of zone. So I'm looking for confluence. I know this is not a perfect strategy for other people. I don't know if it's algorithmically capable. I'm just a person clicking buttons, but I want to look at what were previous highs, weekly, daily, the two biggest ones, and then how do those align with the primary trend following strategies that I use. Trending markets are different than random walks. In a trending market, these moving averages don't get faked out near as much. I believe we're in a trending market. That's my underlying thesis. Will I get chopped to hell and back if the market decides to go on a random walk and not do anything relevant for like a year, aka 2018? Well, the duck will make a lot of money and I won't.
Does that work both ways? The significance of these high time frame moving averages, so they're both like an indicator of trend, and then also when they align with key levels or value areas. They make for, good risk-defined, high probability areas to position. But should they fail, do they have the same kind of strong effect on your view as they do like in a trend? So, for example, if one of these high time frame moving averages were to fail quite convincingly on the high time frame, is that also a signal in your system or in your view that, okay, this was a really good pullback level as per my system, but given it's failed or it doesn't look like it's doing its job, I'm gonna it's going to have a strong effect on my bias or on my directional bias? Does it have that kind of angle to it, whereby it's, both good technical structure if we're trending, but also tells you of a shift in conditions if it doesn't work?
Yeah, I think it's easy to get fooled once. And if it fools you again, this is George Bush.
Oh, yeah, crap. Yeah. Of course, yeah. He butchered that, didn't he, originally?
Essentially, the second failure or is going to give you the hint, right? Mm-hmm. So like it broke down here. So this was the bull markets, let's go. It's only been a year since we had parabolic blow off, which was warning number one. But when we broke down and retested, that's your, hey, we need downside. This is when it's like, oh shit, by here, I'm not giving these moving averages as much attention. Now, in real time, you have to be cognizant of how do you make those decisions? It's not easy. So you have to be cognizant of that. I was very careful. That's probably the only thing, honestly, that saved me in March. Like I was tethered for like a day, maybe two. Mm-hmm. I don't remember, I was tethered somewhere in here from like 8K, and I missed that horrible move down. I got lucky and I saved a lot of money in that period, but it was probably just luck due to what I viewed as uncertainty. This is a fast moving average, a 20-week, but like, look at these directional changes, like it's kind of all over the map. It's leaning up, it's leaning down, it's going sideways, and the price interacted with it in many different ways. This is not the cleanest time for someone using that type of strategy. And it was a pretty boring time for being in crypto until we nuked, right?
Yeah.
Once we nuked, it's fun to pay attention again. To try to finish answering that question, the next time to consider, is this real or not, is probably here. Mm-hmm. Like when we were doing this, I had a lot of conviction here, but I was also leaving room for maybe we will like tap and run on some kind of weekly moving average like that. But my conviction came more from consolidation. But now we're in the trending market. We just rode that, and now I can be a believer. Like these trends last a while, So this is kind of your reassertion of the trend and your first test. We haven't had a second test of that moving average over the course of a cycle, whether it's Bitcoin or something else. A lot of these cycles run for years, like 2-3 years on say a tech run or something. Well, they can test it over time, and then it becomes of how many times do I test this before I start to lose sight of it, and start to not believe it. Back here, look, they front ran it on that dip. That's an interesting hint too, So basically, I'll believe this probably the next 2 or 3 times it happens. Okay. Is to try to summarize.
No, of course, that makes a lot of sense. Have you ever found yourself, or do you see this common? I find with a lot of not indicators necessarily. I mean, it works with levels as well. People kind of trap themselves psychologically with the idea of a retest or a pullback. I don't know. This narrative has gone down a bit over the past couple of years, but you'd have a really good level, and it would get broken very impulsively or very significantly. And for me, generally, the break of that level is itself the kind of trend-defining event, right? And then whether it pulls back or not, that's then the question of, how well in terms of risk reward can you get a position on, etc., etc. But I find a lot of people take that a step further and they kind of won't believe in a move until something gets retested. I don't know if I'm just babbling here, but surely you've seen something
No,
similar,
you're not.
right? You see, like, there's like a moving average
you.
or there's like a big support resistance flip, it breaks. That in itself should be enough, but then they're like, okay, but we have to come back and retest to confirm, whatever that means, and then we can go up. And they kind of end up missing out big portions of a trend because of this seemingly arbitrary requirement to come back and touch something before running away. Do you have any, I mean, have you ever fallen victim to that or seen similar with tools that you use?
Yeah, I can show you where I've fallen victim to it recently. I think it can absolutely be a trap. The market doesn't owe you the pullback. You said that earlier. Mm-hmm. And then another thing that you say sometimes that makes me laugh is like, oh, we're into longing into resistance season again. Because what are you supposed to do? Like, you could have an algo that buys the breakout, but it could be there for 1 minute. You could have it could go up for 1 minute and then you get chopped to crap because, you have some automated stop or whatever. Or you can wait for the retest and maybe the retest never comes. So longing resistance is one of the ways to have the most amount of time to get in the position from the optimal kind of risk reward scenario. But you could just go straight into your stop, right? You don't actually get the breakout. So how you do that calculation is based on whether you're profitable over time doing it or not, or whether the broader bullish market structure supports you to make that decision to long resistance because it fits other criteria. Like there's a ascending triangle, or there's something else that gives you a bias to say you think this is going to break up, but it doesn't owe it to you. I'm going to show you another one real quick. In Legacy, people that follow me will laugh, but this is Bed Bath & Beyond, absolutely wrecked value stock. And I played the swings on this one, and these diagonals can make you cringe or whatever as much as you want.
They look great.
But the point is, this was a stock that was like this huge wave and long trends. This is a weekly chart that you could follow over time.
Yeah.
So I liked playing it because I was like, this thing is volatile as crap. And, this is fun. Well, I don't remember exactly what the low time frame chart situation was, but there's probably some daily thing here. I got in at like $12, $12.50, something like that. And then I was out way too soon. And then I missed, if I go to a daily, I think I missed this earnings. So I got in here like before it broke up from this pattern. Mm-hmm. And I was long spot. I had options. Like I was long as balls on this thing from $12 or $12.50, something like that. Broke up, and then I was out before earnings, and then this dadgun thing just gapped up hard as crap after earnings, broke above this multi-year pattern, and I'm like, okay, well, I'll buy it if it retests 15 again. I'm not guaranteed 15. That's a 25% drop now.
Yeah.
And maybe when it retests it, I don't want it. So like I have to make a decision as a trader. When is the acceptable place for me to get back in this trade if I want to keep trading this asset? I have said I'm just going to sit on the sidelines. Like that was fun. I had a 2-year flirtation with Bed Bath & Beyond, a store I could give a crap about, but I jived with the chart for a long time. I don't jive with the chart anymore, so I have to say no. In crypto, unfortunately, Bitcoin forces the correlation on everything else. So if Bitcoin doesn't feel very tradable, you're just kind of dead in the water. You should just walk away for a while or something if you don't feel comfortable with it, or hold spot and stop trading. Because you can't, in Legacy, I can say, all right, well, I'm done with Bed Bath & Beyond and I can go find some other crap. And this is not meant to shill my bags, but I was looking for what's something else that flipped some really long-term trends and has these stupid swings, and maybe it has a decent value and maybe it fits a narrative. Well, U.S. Steel, it fit some narratives for me. It showed some signs of flipping long-term trends. So now I'm interested in trading a stock like this. Like this is a classic example too. Like Legacy sometimes is dumber than in crypto. Like I think Forex, with the amount of the liquidity and all this stuff, like they're going to go take their liquidity from these people. A lot of times in Legacy, people are just like, I'm just going to buy this stock when it is over the 200-day moving average, and then I'm going to hold it for like 5 years.
Yeah.
Well, people sold this when it dropped below the 200-day moving average, and guess what? It went down like 90% because it was also a piece of crap company or whatever, and it lost its trend. Well, look, it regained its trend. Okay, so if I can combine regaining its trend with some other crap I want to make up, and I'm jiving with the chart. Sometimes it's these whatever animal spirits of the market, or whatever you're feeling in the market. That's a part of trading. This is one I'm willing to play. I'm willing to hold it. I'm willing to do stuff with it because the chart feels okay for me. So this can be my new BBBY. It doesn't. I don't have to be in one asset. That's hard with crypto because Bitcoin rules everything. So how you adjust your lens for everything else you look at, whether it's Ethereum or whatever else, it always has to be in context of the daddy asset.
Yeah, that's very well said. And I agree with periods where, Bitcoin just isn't doing anything. If you don't have an edge in those conditions, then trying to force trades with Bitcoin is a great way to dwindle your stack before it starts trending. And I think this is something Gainsey emphasized a lot when he was on the show, and his argument was basically it's important to essentially survive those conditions and not erode your bankroll, so that when you do get much clearer conditions, you can go in with bigger bet sizes, more conviction, and make up all the trades that you didn't take within far inferior conditions, right? Bet big when it matters, when it makes sense to do so, and don't when it doesn't, which sounds very... it's correct, but obviously easier said than done sort of thing.
You've said a lot of good stuff over the years, Cred, but you reminded me of another one you said there is like the trade execution is way different than, the trade setup. Mm-hmm. So when you're seeking, okay, here's the levels, here's your entries, you will just enter it, you dumbass. And it's like, well, hey buddy, you missed the 4% drawdown and I was on 5x leverage and I just lost 20% of my stack. Like, how am I supposed to just enter and be okay with that? That's it's like, well, it wicked and it went right up. Why didn't you wait till the daily close, you idiot?
God, yeah. I agree. That stuff is
in real life, it's hard.
It is. The monthly, this is something I drone on about a lot with the monthly 10.7 level, which is the other highest close that we broke above. And it's something I'm going to just quickly bring it up on my chart, right? You can keep your screen share off back in a moment. That's on the monthly time frame. I'm just going to add that kind of 10.7 level that comes from the highest close from whenever that is, July. And so if you look at that now, right, it looks like the most obvious, easy peasy support resistance flip available, right? You get a strong close above it, another candle above it, then that red candle which retests, and then we've just gone up to 15K, right? I'm sure a generation of hindsight technical analysts, teachers, whatever, for the next 2, 3, 5 years in crypto are just going to teach support resistance using this monthly flip, which makes it look super easy, right? What's less easy is recognizing that you had a monthly close and then 2 full months trading at this level, right? So let's say 2.5, whatever, 3 months in this area. We went as high as 12.2 and as low as whatever that was, 9.8.
9.8.
Right? Before you then actually get your high time frame move. So 2.5 months, a $3,000 range or something from high to low, and then you're quote unquote rewarded with the move from support to resistance. So, I didn't see that many people when price was down at 9,800 saying, yeah, I'm still technically buying the 10.7 support. This is just the wick. People were buying that there for other reasons, but $3,000 in 2-3 months of price action is a lot of time to mess up some trading execution and lose some conviction. So I totally agree on that front. And someone actually asked the question to this, which I'd like to ask you as well, with regard to execution. And he says, can you give some example or even just conceptually explain how you would execute trade if pullback occurs to the 20 moving average?
That 20 week. I would hope I'm awake, because if I'm awake and I see it, and I would be looking. Let's see if we can find some examples on low time frames, and let's go to something that just ate crap recently. Was it Uni? I'm not sharing right now. Let me share real quick. So I don't want to be the person saying oh yeah, I always, long divergences or anything like that. Do you see my screen?
Yes.
Okay. By the way, this looks like a trap. We talked about when do you feel confident going long? It's this is not the type of consolidation to me. This feels like the type of consolidation that's going to end up as a trap.
Trapped to which direction?
But it feels like, well, I guess it depends on which way it breaks. But if it goes up in any capacity, I'm not a believer. If it goes down, I'm not going to say like, oh yeah, short it to 14K.
Yeah, fair enough.
Like I could see like,
Oh, God,
like,
nice. That's like a week of unprofitable trading, like most people.
Like look at this last one, like the level. What is that?
Yeah.
Like, so where do you find confidence in that to go in? And that's why I think being low leverage at the end of the day was helpful. All right, so here's Uni. Unfortunately, there's not exactly daily supports there. Let's just isn't there an option to invert a chart?
Yeah, you add something to the ticker, I think. Is it?
They just added this recently, and I can't remember where it is.
Yeah, maybe someone in the chat will be able to let us know how to kind of flip these things.
It doesn't matter.
Alt-I, apparently.
Alt-I. Wow, look at that. Look at that.
Wow, thank you very much,
Dana. Now we have a bullish retest of a 20-day moving average.
Is this what bag holders do?
Yeah.
They just flip the chart like, no, it's fine.
That's inverse, brah. All right, so 265 is our 20-day moving average, and let's assume that we've respected it over time. But oh my gosh, like we went as high as $1.76. Okay, well, if we know that that's our 20-day moving average, now I might look for what am I getting that's giving us signs that there's weakness in the continuation of this down move. We saw enormous strength here, just high volume, big candles, and then immediate dead cat into the low time frame moving average and prior levels. So I'm not a confident buyer right there. And then we saw lower volume, much lower volume, grinding down. So now you're seeking, okay, well, where can we potentially find a buy back at what is our high time frame moving average, 265? We already decided we're gonna be plan followers, and 265 is our buy zone. And now we're looking to see where does the conviction show up. Mm-hmm. And to me, I'm on a 30-minute chart here. The conviction shows up when the volume is highlighting capitulation that, look at that, goes directly into, look at the shit I drew on this, but goes directly into that horizontal line. And I bet you, if you just want to fit your bias a little more, if you go put something like an RSI on there, there's like some kind of correlation or like some kind of divergence that you could find on some low enough time frame to fit all that. Is that the cleanest way in the world to do it? No. At some point, you got to be willing to pull the trigger on all that. I was looking at Uni and Curve yesterday, and I didn't know exactly where I wanted to go. This is the bearish side, so we're actually looking at you should be selling there. This is since we inverted it.
Yeah.
But when these were bottoming, look at that. So get these moves down. This is not giving you the hint. Like, this is price discovery basically to the downside. Yes. But you started to see some buying, and you started to see the low time frame momentum oscillator clicking in there as well. I don't know how other people do it, where they're like, you know, whether it's clout or whatever else you want to say, like they go in and they say, you know, I bought here, I'm in, you know, I bought the bottom. Well, in reality, you can just set your stop at new lows. If it's small enough of a position, you're not going to kill your account by longing something like that. And given the fact that you just broke down an enormous amount, like what's that percentage down move, you know, like let's say from that prior breakdown to the bottom was a 21% move on a 30-minute chart. There's a lot of upside on something like that.
So is it fair to say that you kind of build a case around levels that you've deemed significant? So there's like a fair amount of discretion involved, where you'll look like, you know, you get the area that you want to do business at from whatever tools you may be using on the higher time frames, like a moving average in this example. But then you'll really crack down on the lower time frames and look for, as you mentioned, like momentum running out of steam on one side, and kind of what price does, what it does relative to the levels. You kind of build a case at structure for being long or short. Is that a fair summary?
Yeah, all of that case building was giving me confidence to essentially believe in the very first thing we looked at, right? We were looking for it was the opposite. So we were looking at being a buyer at 264, right? Because that was the high time frame thing we believe in. Now we're looking for low time frame confluence to follow through. So now we've made a higher low. Maybe that's our thing. Maybe Uni is about to nuke back down, like, but we believe in something higher and we're looking for the low time frame case. Yeah, we're building the case. I know that sounds stupid in some ways, but that's why managing these is hard.
Yeah.
I didn't take these trades on the other end of this because this was the buying side, right? This is the bottom capitulation. I didn't take that trade, but I sure as hell was looking at it. I have one that tweeted yesterday about Curve. Hard token to be a buyer of, on any given day because of how poorly it's done. The sucker is down. Look at this. Golly, I can't navigate.
What a trend.
This thing's down hilariously. Let's say from a daily close perspective, down 95% relative to the dollar. So, but I'm looking at it and I'm like, man, I really think this is going to try to do some kind of shenanigans, double bottom, something or another. I want to be a buyer. I was doing the same thing back here. I missed it both times. I did not have the confidence to get in. And then there were these huge moves, but between what looked like exhaustion on the low time frames, and then you look at some hints in the case building, like you said, on the low time frames, you can start to establish a case to make a move and to get in. Are you doing it for profit or clout? It can be both. If you time it right, and if you're willing to cut it quick, if you're wrong, then maybe you have 1 or 2 or 3% on the downside for something that once it starts squeezing, it's like 20, 30% move to the upside. But you have to be on the screen. Like, this is where Salsa shines, but of course he's Bitcoin scalping.
Yeah.
Like, he is on the screen to take advantage of that just perfect moment. And what he feels in that comes from watching candles over and over and over and over again. But it is definitely a situation where you're building a case on top of a longer narrative, because I've literally watched this curve chart, as crappy as it is, since it existed.
Like a child grow up and stuff, right?
Yeah. So you're like, man, damn it, I want this move because this thing's going to go up 50 or 75% at some point. Yeah. And it's like, it's that fat pitch that you want to be able to go to bat on. But like, you could just end up watching it pass you by because you don't pay close enough attention. So you have to make those choices, I think, on the lower time frames, because if you just look at the weekly and you execute the trade off the big level, look at the wicks that go down in crypto, Absolutely. 20% off your level. And it's like, okay, well, I have to have like 2% of my account in that trade. I'm not diversifying my crypto portfolio amongst 50 different things, or I'm not bothering myself pissing around in altcoins to put 2% in on one trade on spot or something,
For sure.
I want to go in with bigger size in something with liquidity that I can manage tightly. And I'm looking at 1 or 2 tickers, and hopefully I get one right and nail it on the way I'm looking at these things. Calling that bottom, calling exactly where I'm going to buy that Bitcoin dip on where this started, like finding that 20, 30% drawdown. That's a little harder than once you feel like you've confirmed it and you have a fundamental bias. I don't have a fundamental bias on Curve that I'm bullish on. I'm not. But in the Bitcoin case, I'm like, okay, now the trend continues. Well, now you start buying the low time frame dips. You start buying the new consolidations. You build your position over time until it blows at the top off again. And now your average is not right there at that 20 week that it dipped to the maximum downside. Your average is somewhere above that, but you worked on your position throughout based on the low time information that you received.
Very well said. I agree. Especially when it comes to high time frame trading, it's quite rare that you get the high time frame move from the first interaction at that level, right? I think this is something that gets mischaracterized. Maybe I have to make like a video or something on the topic. But the idea of first test, best test, right? Contextually, for me at least, that applies on a kind of fading standing in front of it like basis on lower time frames. Like you've got a high time frame area or just any area that you think is important, the market is absolutely flying into it. What first test kind of best test means is that, you know, the highest probability time to do business there for any kind of just to play the reaction is when the market first flies into that level. That doesn't mean that you're going to get the high time frame reversal immediately on the first test of that level. So it almost goes the other way for me. If I'm trading my low time frame strategy at high time frame level, I'll typically follow first test, best test, and kind of stand in front of it and see what's up. If I'm trading for a swing basis, I basically invert my logic completely, and I say I want to be the last person on board this move when everyone else who wanted to buy this level is now selling it, or when everyone else who wanted to sell this level is now buying it or just run out of patience, right? Which might sound a bit weird, or maybe in the most simple terms I can put it, I identify an area that I want to buy, and then I buy it when I least want to buy it. I don't know if that makes sense. Like I'll have a support, and I've tweeted about this before. I have like a support which I think when the market's above it, and I'm like, oh mate, this level is fantastic. It would be God's gift for the market to come back here and to go all in. And then the market flies into it, and I'm like, this is kind of stinky. I don't want this. And then when it really looks shit, like it's really about to roll over, and you know, support's broken, or I find myself looking for lower targets, I'm like, yeah, this is probably the wick. I'm going to get involved.
I think that's a great way to look at it. I have struggled with that exact scenario on Ethereum. I've got it. I got it up here. Here was the underside, right, of the breakdown off the prior highs. Okay, well, we flipped the weekly. Oh, no big deal. These are just 2 wicks, except for like we broke back through that, and then what are we calling these? Just bullish retests? Sure. Like, well, it didn't feel good when you were long from 390 for it to go to 370.
Totally.
You know, like you did not feel good. I got chopped up a couple of times in that. So you have to approach it. Okay, well, am I entering, you know, maybe 10 or 20% of the position I hope to have at 390 where it makes sense on some low time frame thing? Or am I buying the exact max pain, like back in this other prior weekly level? Mm-hmm. Man, look at these dailies. Look at all those wicks down there. Like I tried longing this thing several times in pain, and it was not easy. I had more confidence, as ugly as it may be, anticipating this diagonal breakout where it went up to the resistance in the first place. Like this trade was a little easier to me than, you know, these ones over here. And what it resulted in is in these dailies, I had a couple of really tiny positive trades, maybe a scratch. I definitely had one loss. And then now I finally find myself in position because I think I did long it like at some area where I didn't get the low time frame drawdown on that wick down, and finally got the markup. And now I've got a little buffer in my position that I can sit on. And now I can say, oh yeah, man, it's easy. Just hold until 500, make lots of money, and you're rich. Like,
yeah, buy low, sell high, right?
Yeah, buy low, sell high, except for all those wicks are like tearing on you while you're in this position.
Yeah, like let's say you bought that first test of support, you're sitting there getting chopped for a week before the market actually moves in your favor, right? It's insane.
On a $25 range on a $400 asset, it's like 7%, and you're on margin.
Yeah.
It's like you're getting your ass kicked on that.
Exactly. I agree.
So I think building it up over time, like, what if that's like 10 days of that? Like, you know, you're adding 5-10% to your position each day. Well, I have a 28-day margin position, Cred, because I can't trade on all the exchanges other people can. Mm-hmm. So I've used up half of my time frame that I want for markup just trying to get into this damn thing.
So timing is even more important for you than
yes. So like, that's why I'm more willing to I'll get the paper cuts, get me in, get me out, whatever. Because it's tough. Like, it is not easy getting filled on a profitable trade that looks simple in hindsight. It's just not easy. You have to pay a lot of attention. And that's why most people pay attention to these large time frame trends and breakouts and be on spot. Don't, like, we're talking about trading with leverage where it only takes forgetting your risk, your risk capacity and some other things. You only do it a couple times and you are in big trouble with your entire account that you have exposed on that exchange. And that is very dangerous. So you have to assess, what is it worth to you to put your Bitcoin or your whatever exposed to the market in order to increase your Bitcoin through these margin trades. And this is why most people lose, because these are not easy things to execute. So you have to go in humble, stay humble, and identify how are you going to execute this plan. In my execution of this entry for an Ethereum trade, you know what? I sold several bottoms. I bought several tops because I was looking at something and then it didn't work. And then I got out and I took the paper cut or whatever. That's just part of the plan. That's part of the deal that you get. Now that I'm in this markup phase, though, in my opinion, the stupidest thing I could do would be sell after I get 1 or 2 daily candles. Now I need to take the risk, if you will, that this will actually mark up, and 450 will be a pit stop. And actually this thing's going to go to like 500 or 550 or, ETH BTC is literally, actually going to bottom and it's going to go catch up and run like Bitcoin did. That's the bet you make now, because now I'm making up for 2 or 3 paper cuts. Say you lose $1,000 a piece and now you want to make $10,000, $15,000, $20,000 on a trade, something like that. Like that, in my mind, if you, and I've done this before, you take the L enough times, now you're scarred, like a beaten puppy, and you're not willing to hold when you get the actual move. That's a great way to lose your profitability.
I totally agree. I try to incorporate that as far as possible. With if I'm trading intraday, I want to be first in, and if I'm trading on the swing, I want to be the last one on the train, right? That kind of mirroring effect. But also, I think it goes to show how you'll see in common kind of trading literature, and this is something I actually changed my view on, I know how shocking, right? 2020, changing your position is just like absurd. But having spoken, through personal experience and speaking to people,
your heels in.
Yeah, exactly. Double down, right? It's the only way. And speaking to people a lot smarter than I am, I used to basically argue that you should derive your competence from learning how to trade a high time frame chart first. And then once you do that, you can start playing on lower time frames, more leverage, scalp, whatever. I think for the most part, at least from a trading execution point of view, the inverse is true. If you simply only trade daily time frame, daily closes, weekly time frame, weekly closes, when you're new, it's just not enough feedback from the market to learn how to trade properly. It's just simply not good enough. And it's one of the things that really frustrates me about squiggly line crypto Twitter, which again, always also been guilty of as well, because especially on a high time frame point of view, it negates execution, but also understates the timing aspect of all of it. Like your little squiggly line at support, which then goes up, that could be about 4-5 weeks of absolutely grueling price action before the move eventually plays out. So you'll see people kind of just shitting out charts showing those squiggly lines at structure, and then it eventually resolves in the direction of the squiggly line, and they're like, oh, told you, haha, I'm so clever. And then you look at the actual trade idea, and if you took it from when they tweeted it, there's a 10% swing and 6 weeks in the position before and coming 10 cents within your stop loss before you actually get anything. So perhaps it's not as simple as it may seem.
It can be absolutely brutal. And the only alternative to that to me is your size is small enough that you can stomach it within your risk profile. You've just got a enormous ability to stick to your system and follow your plan that you fit. I put the cloud on here because Josh, my podcast co-host, Josh Olszewicz, he's a system trader. And his mentality, he is dead inside, as a trader, it's he's got a lot of exposure to crypto, but you tell him, hey, Bitcoin's $15,000. He's like, okay. Hey, the next day, crypto's $10,000. Like, okay, you know what I mean? He is willing to follow the plan. He has something that he's back tested on a whole bunch of assets, and he has trade setups like a TK cross. These are just different types of trend following strategies. Yeah, it's just trend following strategies the same way: fast moving average, slow moving average. And when he gets this TK recross to the bullish side, so this green one goes down, that means you're out. It goes up, that means you're back in. That back end movement, that to him is like get in and follow, let it ride. He did it really well on Bitcoin. He told me today he did it really poorly on Ethereum, and he just didn't like what he saw on Ethereum. He didn't follow his plan. And then he was like, Why didn't I follow my plan? This is why I have plans. This is why I am dead inside, because I follow the plan. And if you can do that, then sure. Most of us just don't do that as well.
Yeah, I think Donald is like an outlier in that regard when it comes to high time frames. Like
Oh
he
God.
just doesn't care, right? He'll do that thing where price, it'll look like on lower time frames, price is absolutely smashing resistance. And for him, he's like, yeah, my system tells me this is like an area where a wick is likely to form, so I'll sell it. And I'm there, like, literally on the other side of the trade. I'm like, well, this is weekly resistance. We've had, like, 3 daily closes above it. You know, for me, the probability is shifting towards this area being he's like, you know, whatever. And then, obviously, as is usually the case, I'll look back on the same chart by the end of the week, and it's this big, mega engulfing nuke candle, which was completely unforeseeable. And I'm like, how do you know when the wick is forming on these things? It's so absurd. But yeah, I think if you're a high time frame trader, it's just pretty much mandatory that your tolerance, not for pain, but at least for time, just has to be higher. It's one of my pet peeves when you get traders who look at high time frame structure but analyze its utility or how good of a job it's doing based purely on lower time frames. That for me is just like a fundamental mismatch. Like traders looking at weekly structure and we had that 1 hourly close below. As soon as we tested it, that's it. It's over. Support is broken, right? And using like really short spans of data for structures where price could reasonably spend days or weeks before actually offering the move.
Yeah, you can't take your victory lap until the candle has closed on the time frame that you're basing your analysis on. Yeah. Like we talked earlier about trade execution, you could enter your trade for some reason within, on the lower time frames, but your victory lap of saying something's right or wrong, like you could end up looking real dumb when it's all said and done. Like back in summer 2019, I bet that's when you're talking about with Don, like, it looks like something's just smashing this prior resistance, and then you go back and it's like, oh, that was the absolute top, and now we are going to have a sustained down move, and based on the weekly chart, it makes sense. But you can imagine, what did that candle look like before it turned red, back when it was like hammering up, like just insanely bullish, and it didn't finish that way, and therefore it wasn't that way. But analyzing on that high time frame is a different animal.
Yeah, it's difficult. It's really difficult, which is why, again, part of the reason I shifted my view on learn how to trade a daily chart, etc., versus just get sticky, get involved in the markets, get some useful feedback, and then see what type of trader you are and whether maybe that's appropriate or not appropriate for you. I've tried to get around that because my system just trades on high time frames, but then I have low time frame setups, a high time frame structure, and then high time frame setups, a high time frame structure. And again, they're basically the opposite. In the first one, I'll try to be the first on board. On the second one, I'll try to be the last on board. But it's not easy by any means.
Yeah. I just brought this up real quick. Somebody a couple people in the chat talking about Bitcoin dumping, and we're talking about the high time frame.
The weekly, it looks like it's over on the weekly time frame. Wow, that's looking at that, that's it. Hope that's you're okay.
Your sarcasm is exactly where I was going. Today's Friday, so unless this thing takes an absolute shit, like $2,000 worth or something, then by the Sunday close, I mean, I'm not that worried. Like, this has to do a lot to look. This has to get below 14,000 for me to care very much on the high time frame. Otherwise, this chart is informing you, and you're more than halfway through that candle. It's informing you that your intraday setups should still be towards longs, like your intra-week, intraday. So you would look at this and say, all right, where is this telling me to buy the dip? Now, our hourly thing that was like, oh yeah, bullish pennant, buy it, baby. Sure, that nuked, but now we're looking for what is our logical area to buy the dip on the mid time frames, because in our weekly analysis, that's what's being supported. So I'm able to, I don't care about, I'm in a long on Ethereum. I don't have to be looking at it. I can be on this call and I don't have to care, because we're within a margin of safety on that large time frame candle that I'm good to go.
Spot on. Yes, I think it's, it creates that environment where if you've been locked out of a market or locked out of a trend, you always want any signs of weakness to be the sign of weakness, because that's what's going to let you in. And that's why I think it's really important to, as far as you can, analyze a trend objectively, because I'm sure a lot of people were waiting for the big pullback since basically the 11K, whatever, 12K break, right? And instead, simply because their criterion for a pullback being 20-30% was so strict, they may have ended up missing 4, 5, 6 much shallower pullbacks, but technically just as valid, which would have let them catch a fair bit of the trend. I mean, admittedly, this is something I still struggle with to a large extent. I've got some momentum continuation kind of setups that allow me to get on board basically between levels, but my execution is lacking as far as experience goes. But
you don't have to catch every one of those trades, though.
Exactly.
You can catch the one that you're awake for, that is at the point of breaking when you're available to trade it, and let your broader beliefs carry the day. That we talked earlier. I want Bitcoin. I want to be in Bitcoin. Am I going to freak out because I didn't sell Bitcoin at 15.8 and it's at 15.2? No. I'm confident that my high time frame analysis is well intact. Therefore, did I miss a $600 down move? Sure. But there will be another $600 down move when one Bitcoin is worth 15,000 plus. Like, one day it can go $1,000 without even being a 10% move. It's like a 5% move or whatever is going to be a $1,000 move.
I lose perspective so easily when that kind of stuff happens. I don't know about you.
Yeah.
It's just like the percentage move relative to price moves. Just I'm always out of whack with that.
So I have a question for you. How are you where are you buying a pullback in a situation like we have now?
Gosh. I tend to believe that, purely based on experience and levels and how they get violated from high time frames, etc., that when these high time frame pullbacks happen, and when rallies and trend forming moments in the market happen as well, that cringy influencer style tweet I posted that it'll go higher than you think, it'll go lower than you think, and it'll range for longer than you think. Please like, retweet, OnlyFans, Patreon, whatever. I think at the core there is some truth as to how I view these things, that I'll virtually never try to front run a level of support that I think is really good. More often than not, I'll wait for some sort of real wick or extension through structure before I start building some conviction, right? I think 10.7 support is a really good example of that, where we went as low as 9.8. Another one, I've just got the ETH BTC weekly. I don't know if you've got the stream open or another thing, doesn't really matter. But I've got the ETH BTC weekly chart, and this is something we talked about in Monday markets, I think, whereby you had a lot of interest on ETH BTC based on the February swing high structure itself. And you got the market coming in, hitting the level, and then closing above it. Whereas for me, the significant structure was actually the highest close at 2764s, right? So it's the actual, not the wick of that whole leg, but the actual candle body. And this is a very frequent pattern that I've observed, whereby you'll get a wick at kind of the less good level, which will bait in or in the short term reward a lot of aggressive positions, and then it's really the next week or the next kind of candle that goes into the more significant structure, violates it more meaningfully, and then you might build a base and get some sort of reversal. So as a result,
but you're looking for a long on that ETH BTC trade.
Honestly, I'm not sure. It depends. I think I'm at a point in this cycle where my focus is going to be a lot on the USD pairs. Like, even if ETH BTC is at support, if ETH USD doesn't look as good as BTC USD, I simply won't, that in itself won't be enough to get me to long one over the other. But for Bitcoin, in terms of like pullbacks and stuff, if we're talking high time frame pullbacks, it's really good because my chart has a lot of space between levels, and that's generally what I'm a fan of. So the first kind of pit stop for me would be pretty much around 13.8, 13.9, 14, wherever. And there's just a lot of stuff going on there. We've got the previous months or previous weeks high there, that big swing high on all sorts of time frames. We've got the monthly level, the highest close at 13.8, etc. The monthly open, there's like anything you could want as a technical trader tends to land on towards the upper quarter of 13k. So any sort of but again, given my view, I'm not the kind of person who would bid the top side of that structure. Or the first touch potentially on an intraday, whatever, low time frame trade. But generally for higher conviction stuff and certainly swing stuff, I don't want to be getting in as close to the level as possible, or the structure that's nearest to market. I want to be getting in where I'm uncomfortable, which would be the extreme
13,
of
4.
support. Yeah, literally like
13.7.
13.5, 13.4, where it looks really kind of, oh my god, this is about to roll over. That's where I like to, and again, the benefit of doing so is that I'm very quickly invalidated, right? Like I'm either correct and that's going to bounce or form some sort of wick, or it's just going to roll over and I'm completely wrong. That doesn't happen.
Do you like to
go on?
Do you like to bias your trade entry, like say on the last 4 or 6 hours of the daily, so that you're at the point of kind of max pain of invalidation, and also like there's really only room for up, between the time of day and the time of the daily close where your trade would be invalidated?
That's a very good question. It's not that systematic, and for me, it's more kind of price-based rather than time-based. So I'll have the structure on my chart, and when it looks like, a lot of the time, when it looks like it's about to roll over, like if I find myself at support, looking for lower support levels lower down, that's usually a decent kind of long entry for me. That's not to suggest that I only do structure in this kind of masochistic, I only trade in this masochistic way in the extremes. I will sometimes wait for some sort of wick, base, confirmation, structure, lower time frame, signs of reversal, etc. But more recently,
then is your stop also going to be based on those lower time frame, like wicks, like a new low or something like that?
It depends how it forms. If there's something which I feel is really good and risk defined on lower time frames, like a lot of the time you'll have like a really bearish close below and then the next candle just engulfs it completely. Those kinds of bottomy patterns, I'll be happy to define my risk on lower time frames, even at high time frame structure. But if I'm just getting involved straight up at the extreme, even in the absence of such a risk defining feature, I'll normally use a higher time frame stop for that, and then just move it up if lower time frame structure permits. I don't know if that makes any sense, but a lot of it is basically playing on my discomfort, right? I have a plan to do something, and then when it feels like it's kind of the now or never moment, I've just found recently, maybe over the last 2-3 months, that a lot of good entries have come from that, and kind of last person on board the move, if you will. So with something like this, Bitcoin, again, all the confidence in the world at 13, 7, 8, etc. If we get this sort of pullback, I do have medium-term support before that at about 15k, this consolidation here, whatever. Not an amazing structure, but not one I ignore in a trend like this. High time frame pullback, 13, 7, 8, and it really depends what happens there. My bias will be towards doing business at the extremes, if appropriate, and then if that fails, I think we have to have a conversation about 13k and then 12k respectively. But really the daily level that I've got at 13k is kind of tenuous. My system does provide at least roughly some sort of hierarchy in terms of levels. So if I've got this amazing confluence of all the monthly high time frame stuff in the world at 13.8, 14k, and that fails, I'm not going to be terribly keen to fade that breakdown with like a daily level in the middle of nowhere, right? So in terms of hierarchy, if 13.8 whatever fails, doesn't do what I want it to do, I'll probably get out of the way at 13 and then look for the 12k, whatever, 11.5, 12k, that weekly area we're talking about as the next point. But again, plenty of stuff to be overcome in the interim. There's no evidence that this is just going to nuke and break down straight away. I've got lower time frame support at about 15k, and just pretty much the last little consolidation we built before this most recent leg up went vertically, went sideways a bit at 15, and then went up again. So that's support for me until proven otherwise.
Yeah, this is doing exactly what we thought. Like that dumb. This is why being a pattern trader is its own special skill. But what you have to know, when is it just a pattern that's lying, like a little pennant like that, and when is it like, oh, well, that pennant nuked and now it's a bull flag. It's like you're constantly redrawing, and I like to look at patterns for the sake of knowing consolidation is occurring, like and seeking impulse, like seeking volatility, especially if you're an options trader. But purely basing my trading off that is very, very difficult. I wanted to ask you about that ETH BTC and see if you agree with this. I've been wanting this ETH USD trade. Like I just feel like this ETH USD trade can occur. That ETH BTC chart, I didn't have the confluence there to really feel that confident in it while it was bleeding off, and that weekly level that you highlighted was not supportive. Now with me, I was looking at this difference between, okay, here's that weekly level that I do like. If it would touch that, I'd be an interested buyer. But there's this 200-day moving average that like it's way higher. I feel like this is going to nuke my moving average. But Part of me is, and Josh says this all the time, is like he can't trade ETH BTC because he doesn't think anybody really looks at it outside of like major trends, because for the most part ETH USD is such a tradable pair, BTC USD is such a tradable pair, that other than this really high time frame like weekly confluence, it's kind of hard to pay attention to a trend following strategy on that particular pair. Like, how often are you really trading?
Yeah, I think that's fair.
ETH BTC. But do you look at that ETH BTC weekly that you pointed to support maybe a bullish thesis that you have in ETH USD, or does it break your rules to look at two different charts to make one decision?
Yeah, no, so as I mentioned, like for me, these charts, they provide context, and the context I use in part of an investigative process, if you will, to build a position. Like, what are the arguments for being bullish? What are the arguments for being bearish? If there's kind of a spectrum, where is price right now, and how actionable is it, etc., etc. So in terms of, to answer your question, using ETH BTC specifically, I won't use it on anything below the weekly time frame. And then if I'm using it, it'll be at key levels, or more presciently, on market structure shifts, like significant high time frame market structure shifts. So one of the things we talked about in Technical Roundup, and I'm allowed to show that newsletter because it's free now, was the first we were really early ETH BTC bulls after it made a higher high through 2560s, right? So you had these weekly big swing, then a low, then you had a lower high, but then a higher low. So, that's consolidation, that's, whatever. And then on a bit of price action that looks insignificant relative to where we are now, but technically we then had a higher high relevant to the last lower high. And so we were actually flipped bullish on ETH BTC on this little seemingly, again, insignificant support resistance flip there. And then obviously the move that followed was ETH led. So...
And you weren't demanding the higher high relative to that February or March high.
Shockingly enough, no. We weren't.
But that's why I like it, because you're essentially front running the impulse candle, which is where all the money is.
Yes, yeah, and I think there's something to be said for these more subtle shifts in market structure. I know it's kind of trendy nowadays to be really strict with requirements for market structure shifts. Like, I've seen arguments made that you need, when you have a higher high, the high that's overcome needs to be one that first led to a lower low. Then you get the higher high through that significant high, and then only when price is making a higher low, that's when you get positioned and all that kind of stuff. And it's just too late for me, personally. I think you're kind of asking for too much. And as you mentioned, if you want to be catching a lot of these impulses before they happen, a lot of the time these more subtle market structure shifts are kind of money for that present purpose. So yeah, I'll use ETH BTC on high time frames at high time frame levels, like nothing really below the weekly, for, as you mentioned, trends or market structure shifts or key levels being broken. And that will inform, if I have a strong view as to ETH USD or BTC USD, where I'll bias, my trading. One thing I will say, it tends to be only kind of bullishly skewed. So only if ETH BTC looks bullish, for example, and I've got a general view to the upside in BTC USD or ETH USD, then I kind of marry the two, and that becomes an actionable insight. If I'm, for example, bearish or neutral Bitcoin, which I think is just going to toss the market around or lead for whatever reason, and even if ETH BTC is like looking positive, I won't then say, well, I believe ETH is going to outperform even if the market dumps, because I still have this kind of preconception of safe haven in Bitcoin and stable coins rather than ETH. So that kind of insight of translating an ETH BTC view into a trade in the cash pair or in the dollar pair, it exists, but its scope tends to be quite narrow in the form of ETH USD longs being favored to BTC USD longs if ETH BTC looks bullish and the USD pairs, the cash pairs for the other two instruments look good as well. So it's there is room for it, but it's not exactly the most expansive piece of kit.
Yeah, I mean, I think if you're going to get bullish Ethereum, this is a fine place to do it. Like, there's nothing...
Yeah, I wanted to ask you about ETH, because, again, I don't think my insights are hugely helpful with where the market is right now. The monthly close for me was rough. I think, Donald and I essentially made that argument. You have the 400 level, 389, and the monthly closes around it were just kind of ugly, right? You got to close above it, which I remember because I basically bought the dip on this candle, which ended up being a fake out. Then retested it on the most recent monthly close as well as resistance. As we mentioned as well, there's just been no follow through on the weekly time frame on any of that bearishness, right? If you take the pre-breakdown cluster, which I think you actually have on your chart as well, basically the little range before the big nuke candle we had on the weekly, I'm just going to use the lowest close and highest close as structure. That's kind of a range, right? And for me, we've cleared the bottom side of that range, and it looks like we're poking our head above the top side of that now. So if that breakout occurs, or if you want to be extra strict, you can use kind of the highest close of the consolidation as a whole. It's going to be really hard to be bearish ETH USD in the coming weeks and into the monthly close, etc. Because at that point, you've reclaimed the lower half of support, and then you've broken out of the range as well. That just screams continuation, and at that point, there really isn't much in the form of resistance until you just start reaching silly prices. The only caveat I would personally add to that, and I'd love to hear your view, is because the monthly close was shitty. If this type of mega bullish weekly setup shows any signs of waning or not playing out, etc., I would be much more aggressive to cut it, because I would see a relative weakness or the lack of follow through on such a well-built weekly setup as evidence of the bearish monthly maybe finally trickling down and showing some force. And I'm very cautious with this generally, because I basically bought this breakout, right? I got long ETH at 392 or something on the fake out, so literally on this support resistance flip, basically here, that deep swing we had, and I basically bought this retest of the monthly level and ended up getting out. That trade, I always joke that trade exit was one of my best trades of the year. But I bought the top, but I got out on the bullish retest at like 387, so I basically scratched buying the high time frame top, which felt great. But so, I'm very cautious because I've been in this, I've seen this story before, and I was on the wrong side of it. So if it's going to play out this time, and the failed breakout, just the deviation, it needs to go hastily to mitigate the monthly view. But I'd love to hear your thoughts on ETHUSD.
Well, and you can picture, just looking at this chart, that it can meander around between here on the high end down to, say, 350 and just do a lot of nothing.
For sure.
For that time period. I'm going to pull back up. And there's one level on ETHUSD that I can't really get out of my head. And so it's funny seeing your chart versus mine. If I zoom back out, I've got...
I think you're screen sharing the wrong screen.
Oops. Here, let's try again. How about that?
There we go. Yeah, that's perfect. Thank you.
All right. Sorry. That's I've got, this 306 back here. I like to mark these, like, where did it break down from type of levels. I don't know if that fits with, some people, the way they work, but we melted off, the market decided we're not interested anymore. So I consider these important. And then this is the one that's like the, Bitcoin's 16,000 type of level, right?
For sure.
The 788, whatever, that weekly close up here, that was also a perfect bearish retest of where we broke down off the highs. Now, of course, this is absurd and goes to $1,500. There's a double in here back in these handful of candles. Right? Yeah, it's nuts. But I think that the gap between where we are and 789, 790, whatever, I think that can be filled. I think it's kind of stupid, but like I think this is a trade that you can make on the long side if you're one of these like hilariously patient people. Yeah. I'm trying to catch this in a way that my low time frame trade setup doesn't have this degree of risk. Like I want I want this. You know what I mean? Like
the tweet style risk, the risk reward tool, yeah.
So like this is a trade too. If you go to the intraday, like that's a real trade. But I'm the state of the market. Do I have to close because it hit 450? No. Am I willing to fully retrace and have to cut this and have not made any money? And while I just made a decent chunk of money today, well, yeah, that could happen. But the upside is it could hit, some absurd number. Will I really hold the 789? I don't think so. But the trade setup fit for me to go from wherever I ended up getting in the long up to 450.
Yeah.
That was the workable trade setup. And then there's this hilariously large, range of price above that is like the whipped cream, but to a significant degree, like your profit was $40 that you built into your trade based on your risk profile. But you know what, if the market wants to give you $140, then I like that. And that's not some hard and fast, here's my RR and boom, like that's my trade plan and my rule. Like it's much softer, it's much more wiggly, and but my risk profile is still the same, right? Like I'm still risking the same amount. Like if we hit, say we go a daily close below 370, I sure as hell won't be in that.
Sure.
So like whatever that dollar amount that I would lose is fairly static. Like where I decide to cut it, maybe I'll be a little break even, maybe I'll be a little bit of an L. I know at some point I'll be out, no doubt, and that'll be within my risk tolerance. So I'm holding for higher, even though I could take profit in the 440s and be happy with the trade. I'm waiting for more. This is like maybe the actionable way of the bet more meme.
Yeah.
Like it sounds dumb, but like we just did the whole move that I was talking about in like a day and a half. So
exactly. And I think when it comes to like, if you're a swing trader, and this is something I tried to convey in my FTA video, I think you at one point you could just you need to assume that certain levels are going to roll over, right? You can't just go from support to resistance on like, especially if you're considering higher time frames. If you're going to swing at a certain point, you have to assume that something is a pit stop or a bump versus a level that's going to reverse the market. And
that's
Don
essentially
is
how
really good at that. Yeah, exactly. That seems to be what you're playing into.
This number of days, we blew off the top here and then we went higher, but like let's just act like we kind of reached our range here. Well, that's 100 days. In Ethereum spent 100 days in a broad range and then formed, what if you want to talk about patterns, several things. More importantly, now it's just bouncing at the ceiling of these weekly levels that we found important. Let's call this our rogue liquidity event, like we talked about earlier. Sure. Everything else is just like perfectly in line with the weekly breakdown from the ICO market. And now we're hammering it as a ceiling, like we just want to obliterate it. So do I want to give it some leeway to make me a whole lot of money instead of have a nice trade? Yeah, because this is a bull market. It's not a bear market. I want to make a lot of money. I don't want to have to freak out about 100 different nice trades where I'm always managing the risk side. I'm always dealing with what's my loss capacity on this. Whereas you have the buffer, and now it's like I can go to sleep. And, if the market breaks down so deep that it hits whatever my baseline emergency stop is, well, that sucks, but that's pretty rare. I'm probably not going to wake up 6 hours later and this thing just nuked me out of a like serious position. So I want to wait for the upside now. If you get lucky enough to have a cushion under you in the trade, then I think you can wait for the upside if the trade setup is rational to do so.
I agree. I think that's one of the underspoken benefits of a good entry is that it just allows you so many more liberties with trade management without looking or acting like an idiot.
I don't think I'm just being some kind of bulltard doing that. I'm just saying, like, I'm trying to acknowledge, hello, Bitcoin just went up $5,000 in less than a month.
Sure.
I think Ethereum BTC just bottomed and Ethereum USD looks freaking prime to go ham. Yeah. So I want to give it the leash to do so.
Yeah. And you're already in a position that means that you're not technically buying resistance per se, right?
Yeah,
so that
I'm not.
As well.
Yeah, I would have a hard. You could maybe convince me if I just was like, totally losing my mind over some setup. Maybe convince me to add a little bit to a position on the way up on the lower time frame consolidation here. But I got in with enough size that I was okay and I'm comfortable and I'm just kind of chilling and I want to wait because it's small enough of a position that Like if you're 20x every piece, every amount of crypto you own, and you're like way over leveraged, well, your degree of profit by having made whatever percent we're up right now is, account changing enough to where you don't want to do a full retrace of it. If I do a full retrace of this, I missed out. But if I sell it now and then it goes up another $100 over the next week, I'm going to be real pissed if I miss that.
I think if you're right, what adds to your point is that if you're right, the chances of getting some sort of retest on this ceiling, I think, are really low. So that's kind of the prime counter argument to that, right? Is that why don't you sell resistance where you're least likely to be correct, and then rebuy on like a retest? Yeah, exactly, on that retest or the consolidation that follows, etc. Well, what if when you're right, the next candle looks like the Bitcoin daily candle we've had, and suddenly that trade idea just becomes non-existent or inactionable, right? That's kind of an assumption.
Or it does this, and then it does this and this.
Yeah, exactly.
Welcome, and then says, welcome to crypto.
Exactly.
Now, I won't really be in that either, probably. I don't know. Like, it depends on how deep that is. But, like, it has to get back to here to hurt me. And when I'm doing the retest, you're hurting below, like, 430 or something. Yeah. I don't know. It's just a little trickier.
Yeah.
But, yeah, you could try to play that retest. Or like you just showed, like Bitcoin didn't give you the chance. And I don't want to have to, if I'm in a comfy position, I don't want to have to fight to get into another decent position.
Yeah, to give action to the same idea that you've got on higher time frames, just in less, whatever, convenient or actionable circumstances. I agree entirely. Well, let's see what happens to this, right? Because I don't think it's entirely clear cut. I think the weekly close is going to be important. If we get a weekly range breakout, that'll probably set my bias for just what the rest of this month is going to look like. That's something I'll have to contend with on Monday.
What do you think gives credence to the strong weekly breakout? Is it 430, or like you've talked about before, like you need the impulse, you need 450, 460, something like that? What's going to give you that level of confidence that it was a proper breakout?
I think through 430, 440, either on the weekly or on the daily, which is as you've got the last swing made before that, as you very well put, that liquidity event or failed breakout, whatever you want to call it.
Yeah.
I just have the bit of price action on the weekly time frame, which preceded that big nuke weekly we had. That for me is significant, right? It's the range, it's the area or time in which positions were taken such that precede an event like this, and that gives it technical significance, right? And you can even just look comparing volatility from pre-nuke candle and what's kind of happened since then. I just think there's a lot of significance in the pre-breakdown range, especially if the breakdown is kind of the most outstanding or compelling thing on the chart. So yeah, anything that takes it through the top side of that, so weekly closes through kind of, I think, 430-ish, which don't full retrace, are probably good to go into. And again, I think I essentially have to agree, 700, 800 kind of silly prices, just like Bitcoin has an absence or kind of a vacuum of high time frame compelling resistance structures through 14K. I mean, I've got a few, but I think my conviction for those isn't anywhere as near, anywhere as high as it would be in other places. But the only caveat I would add for any bullishness on ETH USD on the weekly is that thing better fly, right? Because I bought this breakout before, the monthly close was still shitty. So if I'm going to front run one of my high time frame closes with a kind of momentum continuation entry, I want to be right virtually instantly, and for the market to teleport and remove all doubt in my mind. If it starts stalling or does like a nice weekly close and then basically doesn't take off, I'll see that as a sign of I might be buying the wick here, and I've already done that, so I don't want to do it again.
Yeah, it would be the most challenging scenario for how to manage this trade would be if there's a deep wick on the next weekly. If you just assume it closes now, and then it wicks down to like 390 or something on the next week, and then recovers it. That would be a pretty painful.
God, yeah.
I'm sorry, I'm on your screen.
No, that's all good now.
Yeah, that would be a pretty painful scenario in my mind in terms of how to look at it and how to manage that trade. I wouldn't love it if we close the week at 430 and I'm like, yeah, baby, 500 on deck. Give me some round numbers, and then it's like
It goes to the
womp,
other side of the
390.
range. Yeah.
Like, oh god, like,
But I agree.
that's a good.
The reason for having high conviction in terms of ETH BTC reaching kind of a do or die level of its own certainly makes sense to me. Again, it's just like a balancing act. Like, given a shitty monthly close, how much business can I really do on the bullish side on a weekly time frame? The answer is some, but I better be right very quickly. That's kind of the summary version of that.
Especially since the correlation to Bitcoin should be strong enough that Bitcoin is essentially pulling Ethereum up.
Yes.
You know, your speculators should want to be speculating, and if they're not, then they're not over their DeFi hangovers yet, and that's a big problem.
I agree. And I'm also, there's like a seemingly narrative absence for ETH somehow taking over and leading the charge for now anyway. I mean, these things change very quickly, and I don't give it all the weight in the world, but I'm certainly going to be more comfortable in, for example, ETH USD longs if ETH BTC looks great and hey, we've got this whole driver, whole ecosystem running out and, you know, leading things, rather than I still think the current narrative, to some extent, the more compelling one, is underexposure, or at least was until maybe the last week or so, underexposure to Bitcoin following a lot of just stable coins, DeFi fucking around, and then FOMOing ETH underperformance relative to Bitcoin, so you just FOMO into Bitcoin instead. And I even made a video when Bitcoin was first breaking out saying, is it worth playing ETH as a catch-up play because Bitcoin's broken out and you're not in it? And my answer was no, because generally that's not how crypto works, right? You have a strong pair, at least out of Ethereum and Bitcoin, you've got a stronger pair which leads, and then the other one kind of ends up being dragged up. But whenever the stronger pair hits a ceiling or runs out of steam, it's not like the other one then catches up and then the market cools off as a whole. It's like the strong one leads, it runs out of steam, and then wherever the weaker pair ends up, that's where it ends up. There's no requirement for it to make up that lost ground. So until I see evidence of that shifting, or I guess some sort of narrative shift, maybe add some conviction, I'm not terribly sure, to be completely honest.
Yeah, I think that's a fair justification for why to be cautious with Ethereum. It was not running right alongside Bitcoin on the breakup back when it was at 240 or whatever, and it ran hot all the way to 400. It was leading Bitcoin while Bitcoin was, ranging and stuff. And now we're seeing, is this Bitcoin catching up, or is this Bitcoin leading the next big macro cycle, and then speculators run to Ethereum to be next? Like, I don't know, man. Like, is it going to go straight to 790 like we looked at? I don't know.
That was my thesis for when I got long on that support resistance flip at 390. My argument was, well, 390 is the best monthly level. There's evidence that that level is rolling over and not doing its job as resistance. And the next resistance is at some made-up level, which is like a 2x, basically, which sounds absurd to argue for Ethereum. That ended up being wrong. And so now that we're kind of in the same spot again, this time it's different, maybe, who knows, etc. But I agree, like, there's definitely upside to be played if this breakout is genuine. But this is the thing with like do or die levels, right? Like, if your ceiling breaks, you're going to be very right very quickly. And, it makes sense to hold the position because the whole pullback, etc., consolidation, it's unlikely to be generous to you in that sort of case. But again, if you're wrong, you're like, oh my god, I just kept my position into resistance, and we had a bearish monthly close, I think if Donald were here, and I don't mean to speak for him, and he's got some personal stuff he's attending to for this, asking in the chat. But for example, his argument would be, we've had a bearish monthly close, and now we're at weekly resistance. This is like a moronic setup to long. If anything, you short this because you've got confluence now. This is a good candidate for the monthly wick, right? And that's a totally reasonable argument, just purely technical based as well.
And classic Don for me to be like, I'm so bullish, and him to be like, I think I'm shorting everything here.
Yeah. I don't think there are any easy answers. I think we'll have some more evidence to work with on following the weekly close and just how this consolidation resolves. But I think generally the worst, there's no harm in planning for where you would consider positioning on a higher time frame pullback, be it in Bitcoin, be it in Ethereum, wherever it may be. If the path is not straight up, it still makes sense, I think, to have some semblance of a plan. Because again, Twitter euphoria and whatever works both ways. Just like, there's a relative amount of happiness on the way up, there's going to be at least, Newton's law of crypto Twitter, an equal amount of panic on the way down if we start putting in some sort of high time frame pullback. So being able to isolate yourself from that noise in the form of a high time frame plan and appropriate expectations as to how low or whatever, where price can pull back and how long it can spend there without, as you mentioned, compromising the high time frame picture. I think that's a valuable exercise to partake in, and hopefully we've done some of that today as well.
One more real quick element on that is if you consider that people aren't exactly interested in like selling their Bitcoin at 15, 16K, you know, like certainly in quantity, speculators want to find what's the next available trade. And if you're looking at purely what has room to run, I think Ethereum is answering that question pretty well, other than dumpster diving a minus 95% altcoin. Plus, dumpster diving those minus 95% altcoins are typically going to require getting into Uniswap and ETH and all that crap anyway. And I just think that from a pure speculative and trade setup point of view, a desire to be in crypto, there is that room for ETH. It's no guarantee, like you said, like, you know, Don can come and stomp on us and all that, and could totally be right. Like, I'm not going into this thinking like I have to be right every time. I have enough cushion, thankfully, after you know, the trade setups that I've seen, and we've obviously seen this uncertainty around it, that now I'm willing to be here and I'm willing to hang around for it, but it's not guaranteed. The Bitcoin new long setup though is really hard to justify because it's so long in the tooth, and that leaves me to thinking Ethereum's the more straightforward play.
I think either way, the prevailing theme across both of these is, regardless of probability as to where the market is right now, there's a lot of opportunity wherever the market has these big high time frame gaps and a lot of empty space, right? Like with ETH above this, you know, we can equivocate 430, 440, whatever. But we look at our charts, and you know, if we bring in someone with volume profile, footprint, whatever, we'll all come to the same conclusion that if mid 400 gets clear, there's like a whole lot of empty space, and we have to start making up levels of resistance, right? Just like in a similar way for Bitcoin, whenever you get that 12, 13K breakout, we've just been filling up a lot of empty space, and there's been a real reluctance, understandably, to sell. So you know, your point of view of looking for that, filling that sort of space, and Bitcoin's done like a fair job and ETH really hasn't yet, I think that's totally reasonable and understandable. And I think I'll have a clearer view as to whether I'm on board that in a reasonably short period of time.
Well, I look forward to seeing a tweet or a video with Cred talking about going long Ethereum at $440.
That's a great take profit signal for you, mate. Just gonna if the last top is anything to go by, that's a great little bit of alpha, inverse alpha, perhaps. Listen, Ledger, you've been incredibly generous with your time. I mean, time flies, of course, when you're having fun with your friends, but bloody hell, this is probably one of the longest Casual Friday episodes. So congratulations on your. I'll send over your silver plaque or whatever it is that we have in the coming weeks. Where can people find you, interact with you, listen to you? Do you want to plug your appropriate links, resources?
Yeah, all these people with us today, I think, are on YouTube. So if you go to Ledger Status on YouTube, our podcast episodes show up there. And then I do some videos too, and I have a playlist on DeFi stuff if DeFi undeads itself. LedgerStatus.com also has those links, and then at Ledger Status on Twitter to follow along. And I promise not to do too much political tweeting anymore now that the game is over.
Awesome. Well, be sure to check that out. And also to our audience, thank you for joining us on Friday. And we've very much enjoyed your company and questions. Thank you to Bybit for sponsoring Technical Roundup. Their links are available in the description below. The next show being on Monday with me again. The newsletter and all that stuff also kindly supported by them. Like the video if you haven't already. I'm sure there's at least one thing you learned if you've listened to any degree of this. Not least to fade my next Ethereum long, given I bought the top last time, and, you know, lightning striking twice and all of that. Like the video, subscribe, Patreon, OnlyFans, all that fun stuff. Thank you very much, and I will see you all on Monday. Ledger, thank you, mate, and I'll speak to you when I stop streaming. Take care.